Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclico.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He's speaking to us from Vancouver. Welcome back to the show, Bob, and happy Thanksgiving.
Yes, it is coming up, isn't it? And I'm looking forward to it. And we've got today beautiful weather. It's very nice. So, hey, life is good.
Yeah, now Canada celebrates Thanksgiving about a month before the U.S., and Canada started celebrating Thanksgiving 60 years before the U.S. did.
Yeah, I remember reading about it, and it was after the Civil War, and there was so much. Now, their harvests come in earlier than ours do, so their Thanksgiving should be earlier than ours, but somehow they couldn't get the legislation through until late November.
Well, theirs is more of a celebration of the First Nations people saving their butts when they first colonized the U.S. Ours was truly a celebration of the harvest.
Yeah.
Yes. Our first question of the day, Bob. Greetings. What's your opinion regarding the fact that most countries use central banks to borrow money from instead of simply printing their own money with debt?
Yeah, let's rearrange that a little.
Yeah.
Central banks have been corrupted to fund an experiment in unlimited government, and they've been providing unlimited funds, and ultimately it ends up with inflation and soaring stock and bond prices and bubbles, and then it all crashes, and then the central banks will be powerless, in its contraction. So, yep. Okay. Now the next part.
Well, now the question mentions that Canada back in the 30s, 40s printed its own money, didn't borrow from central banks, which, by the way, it's not the government. The central banks are made of your country's largest banks. So let's go through
the question, the line itself.
Yes. Now, since 45,
okay.
Canada.
No, just say Canada in the 1930s to 1940 period did this.
Yeah.
One, the Bank of Canada wasn't formed until 1935, so I don't know where you get that idea. And propriety without debt, I don't know what that means. And government didn't overprint. Hell no. A central bank will always provide excessive credit. Is what happens with the market afterwards that controls things. Okay, now then
I think historically, Canada borrowed from itself up until about 1972 and paid itself back with interest.
Well, you can go on with that one if you want. I won't comment on that.
Yeah, so it wasn't the central banks providing the money, but taxpayers borrowing from themselves. And then, Bob, why did they switch to the commercial banks lending us money instead of the people funding themselves? Apparently, North Dakota does that still.
All I'm going to say, Jim, is that the banking first started in Canada in 1816 with Bank of Montreal or something like that. And they were modeled after banking in England, so the directors of the bank were liable. So you had sound banking, and there's always been a basis of sound banking. And then along in 1935, they formed the Bank of Canada, which is a central bank, and that is always a dangerous thing to do because they They don't have any forecasting models. They don't have any common sense. And every recession is going to turn into a depression. So they're overly accommodating, and they depreciate the currency. That's the only thing they can do.
Now, the questioner goes on to say, I think the federal government can and should be producing the currency debt-free without a central bank. Canada, like the States, should end the Fed and produce zero debt currency. What's your opinion on this? It's been done before. Why can't we do it again?
Yeah, well, at some point, I think the next contraction, all central banks will lose a great deal of credibility, and they'll realize that they have to go to a currency that is convertible into gold. And I think the reform movement, the public will demand it. And then you're still going to get the business cycle, but the governments can't use inflation as state theft and depreciation, all that sort of stuff. So we're going to a form where I think the leading countries will end up with their own each with their own currency convertible into gold, and that'll be a very fine thing.
Okay, some more listener questions here. I see higher interest rates, 5 to 7%, is a good thing, as low interest rates destroy savings, devalue money, and enable speculation. What's your opinion?
Okay, here's another one of these questions. Lower interest rates don't destroy savings. You have low interest rates when there are sound monetary conditions. And then on speculative booms, interest rates go up and purchasing power of money is diminished. So I think we have to rewrite these questions.
Now,
the next one is, do you think the Fed or the Bank of Canada will keep interest rates high for an extended period now? They don't know what they're going to do. But on previous bubbles, once the bubble is over, T-bill rates go down. But junk bonds and all that sort of stuff, hell, the interest rates go to the moon. And then the other one, to keep things really clear, is you take the interest rate on long-dated government bonds and adjust it for inflation. And one of the real killers is that real long interest rates go up in the contraction. And so far, they've gone, the one I'm watching has gone from -1 to +2. That's 3 percentage point increase, and it's causing a lot of hardship. The typical increase in the post-bubble contraction in real long interest rates has been in the order of 10 percentage points. So real rates are going to go very much higher.
Second part of the question, does your assessment that a great financial bubble has ended mean we shouldn't expect the stock market to exceed its recent record highs for several years? I note that Canada's TSX, unlike the S&P, has just barely got above its 2008 highs. Some 15 years later, Canada is now not anywhere near as prosperous as the U.S. anymore.
You get tremendous inflation in financial assets during a bubble. It becomes excessive, and then it fails, leaving a huge mess of debt and a long period of at most asset prices declining.
Mm-hmm. Would you expect the markets to go significantly lower and then bounce back like a Japan Nikkei situation? How would you expect this to play out?
Yeah, well, the Japan market after 1980 just crashed and stayed crashed for a long time. Sort of an isolated case on its own, but we're talking recently here about a global financial bubble, and they're all followed by Great Depressions.
Now, of course, they asked that question because they said the Japanese market went nowhere for 30 years. They still, I think, have either negative or zero interest rates, although they're talking about pumping up interest rates. But Japan's birth rate has been falling horribly since the 60s, and they now sell more adult diapers than children's diapers. So that's probably not a good sign for your economy, is it?
No, let's move on.
Our next question comes from our good friend Michael. Hello, Bob and Jim. Fortune magazine headline, Taylor Swift's Eras Tour will be the first to shatter $1 billion in ticket sales, making a lot of people richer. The dollar bill should have her face on it.
Oh, that's fun.
Well, the Swifties would agree with that. Apparently, the cities that host her concerts are bringing in hundreds of millions in business. Bob, I'm confused. Are we entering the age of the celebrity-based economy as the service-based economy goes into decline?
That's a good one, yeah.
I mean, we have governments around the world begging her to please come and perform because people are paying up to $17,000 for a ticket.
I did not know that was that high.
Oh, yeah.
Oh.
Well, apparently, I think people think she's just going to kick it and never perform again. Why the big panic to see her now?
No, that's astounding. I didn't know that ticket sales were that high. Gosh, we went about 10 years ago to see U2 here in Vancouver. The whole plush thing, you know, cocktails and drinks first, and then transit to the theater, and seats just right close to the whole mosh pit and everything else. And I think it was about $700. So now this going up to tens of thousands of dollars. Now, I don't know whether that is the price of the ticket or the price
scalpers
are demanding.
Yeah, that's the scalpers getting it. But I mean, the original ticket prices are very pricey to start with. Mm-hmm. And of course, you have airfares, hotels, and then people go out for drinks and so on. When there's things, so yeah, apparently, you know, $100 million to a city.
Wow.
Now that's a figure off the top of my head, but I've heard numbers like that.
Yeah, it's big money that comes into these things.
Yeah, Michael thinks perhaps Swift's image should be on the dollar bill. I would prefer that to King Chuck.
That's fun.
And maybe her image should also be on Bitcoin.
No, then it's going to disappear.
Well, and apparently dating Mr. Kelsey of the Kansas City Chiefs. He's a good tight end. And I don't know, his mother is the one most surprised that her big, bulky son is dating such a celebrity. We'll take a look at some of the headlines that caught Bob's eye next.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Bob Hoye. Some of the headlines that caught his eye today. The first one is from behind the bamboo curtain. Evergrande chairman investigated over offshore asset transfers, and China's Evergrande founder from rags to riches to under investigation.
That's a good couple of headlines, and that seems to be the way it goes when a highly speculative deal starts to fall apart. This can often record malfeasance. You know, people are trying to protect themselves, trying to bury money out of sight or leave the country or whatever. So, yeah, that's sort of a classic, yeah.
Well, here in Canada, the U.S., Europe, if you do something with a company that isn't right, you face financial penalties, but you don't end up in jail. In China, you often end up at the wrong end of a gun.
Yeah.
Yeah, I'd be scared to invest there.
Yeah.
Just in case something like that happened.
Yeah.
Headline, Asia faces one of the worst economic outlooks in half a century.
Yeah. Half a century. Hey, wow. That takes us way back. Yeah, it's post-bubble contraction time.
Is the Chinese real estate disease now spreading to the rest of Asia?
I expect so. Yeah, remember, didn't we have one last week about problems in Vietnam? Yeah, real estate problems in Vietnam. Yeah.
Americans are still spending like there's no tomorrow, and the latest job figures were double what they expected. So people are still getting jobs.
Yeah. Well, I think it's in the rebound out of everything being shut down with COVID. So you get rebound trying to get back to normal, and then they're importing all these people, millions of illegal migrants, and maybe they're getting jobs too. So, but we think that the financial pressures will overwhelm whatever positive is now, because one of the things that works very regularly, Jim, we talk about it, is the yield curve, which is the difference between short rates and long rates. And in a boom, short rates will get above long rates, and it's called inversion, an inverted yield curve. And every inverted yield curve has been followed by a recession. It's just the way it is, without fail. So, and now there are other signs showing that maybe things are weakening. So, yeah.
Yeah, the latest jobs report in Canada, 60,000 jobs when they expected 20,000 to be created. In the U.S., 330,000 jobs when they expected 170,000 to be created. Does this mean the central banks in both Canada and the U.S. are going to hike interest rates again? Because apparently they don't like people getting jobs.
Yeah, well, my theme on that, it's not the central banks raising the rates. Yeah. It's money market rates, like T-bill rates going up. Then the central bank has to raise rates, and somewhere, I guess in the next month or so, the T-bill rate, U.S. T-bill rate, 3-month T-bill rate, will head over and start heading down. I think it's about 5.50% now, and still just slowly rising. And it will be a telltale on the contraction. Like in 1929, the 3-month Treasury bill went up to about 5% in June. And then in the summer, it rolled over and started declining. So it was an early warning that the party was coming to an end. So I watch the Treasury bill rate. It's boring a lot of the time, but you want to watch for the turn. So my guess is somewhere in the next month or so, the T-bill rate will turn down, and then a few months after that, the Fed will then start talking about lowering rates.
Eurozone factory activity stuck in deep downtrend.
Yeah.
Why is Europe slowing down so much?
Well, it's just ahead of us.
Okay.
And plus, they must have been doing very stupid policies in Europe, but screwing up on energy, shutting down coal plants, and then they were denied full flows of natural gas, so then they had to go back to coal plants. And Northern Europe is just a policy mess. It's just unbelievable. So.
The U.S. dollar's resurgence is a headache for the rest of the world.
Isn't that the way it goes? Yeah. And that's one of our features of a post-bubble contraction, is that the senior currency becomes chronically firm. And sure, the DX got up to 107 the other day, and maybe a little overbought, so it can correct for a while. But if we get into a severe liquidity problem, maybe by year end, then the dollar will head back up again. We've got 105 was the breakout level. And once it sort of come through 105, which it did get, then our target becomes the last high at about 114 on the DX. And if people are complaining now about the strength in the U.S. dollar, wait till it gets up to 114 again.
Headline: Wall Street bankers hope for deal-making rebound after boom and bust. I don't think we've hit the bust yet, have we?
Well, I think when I read this, the interim period in here now, deal-making has just disappeared. So they're looking that the boom is over, it'd be a quick bust, and then we're back to business as usual. But no, I'm reading that into the headline. But no, post-bubble contractions last for quite a few years in the business cycle. you have stronger recessions and weak recoveries.
Now, on last week's This Week in Money, Wolf Richter told us that he believed higher interest rates were good for business because before, when money was basically free, people were making really stupid decisions and financing them. Now you have to actually put together a good business plan that will make money. And so you're encouraged before you borrow money to make sure you know what you're doing and not just give me the money and then I'll see what I can do.
Yeah, a little more discipline coming into the bank, into the commercial banking business. Yeah.
And again, the headline, when will the Fed stop raising rates? That's the trillion-dollar question for bond investors. How are the bonds doing, and why is a rout in government bonds a worrying thing?
Well, it's because interest rates go up, and this crash in the bonds has been very severe. But maybe the long treasuries U.S. are getting oversold. We're watching the technicals for an opportunity here, but it would just be for traders. As I said, in a post-bubble contraction, the problem is rising real long interest rates. So.
And my question, Bob, with rising interest rates and especially mortgage rates, Canada is so dependent on real estate to power its economy. What's that going to do to the Canadian economy when all of these mortgages come due, especially next year?
It's going to be very difficult for those who didn't lock in low mortgage rates when the opportunity was there.
Bob, anything else you think we should be keeping a close eye on today?
Yeah, we're looking for a low in gold stocks in October, and GDXJ and a few of the other gold indexes are becoming oversold. So I think there's going to be a nice trading opportunity in the gold stocks over the next few weeks.
Bob, thank you so much for chatting with us. And again, how much turkey are you going to eat on Thanksgiving Day?
Whatever.
Well, I'm going to the Gravy Bowl.
That's fun.
The football game between Winnipeg and the BC Lions to decide first place in the Canadian Western Division of the CFL.
Oh, that's going to be great. I love the name, the Gravy Bowl.
Yeah. I'll leave a little extra room for it.
Yeah.
Bob, thanks a lot for chatting with us.
Okay, Jim. Good to be with you, and we look forward to next week. Yep, indeed.
My guest has been market historian Bob Hoye, the chief investment strategist for chartsandmarkets.com. If you have any questions for Bob, you can send them to info@housestreet.com. Find us on X @HoweStreet. Our YouTube channel is Talk Digital Network. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HoweStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HoweStreet.com radio is a production of HoweStreet Media Incorporated.